Apes, my name is Tyler. Welcome back to the channel. So we were dead on yesterday in our prediction what was going to happen today, because typically we do see down about 8% days on Thursday, but we did see that down 8% day yesterday on Wednesday. So we did call out on this channel that we would likely be up or down in between about 1 and 3%. We landed directly in the middle, up 1.58% on the day. So a great day. We are still in this bullish uptrend, but we need to go over everything you guys need to know. The technical analysis, the ortex data, the stonk tracker data, because believe it or not, we do have the chance of going through a significant gamma squeeze. And when I say significant, I mean about 10 to even 15%, possibly tomorrow. I'm not a financial advisor, not a financial planner or your dad, so come to your own conclusions. But we do have a lot of contracts that are just out of the money that we do need to talk about. Quite a bit of contracts that are actually expiring in the money. So you're likely to see a lot of hedging, but we will explain that situation more in depth later into the video. But all eyes are going to be on tomorrow's jobs report. So that is going to be the most important thing revolving around AMC. As we do know, AMC has a negative beta. Not always, but most of the time, AMC goes against the market. So if the market is down a lot, AMC tends to be up. If the market is up a lot, AMC tends to be down. But that is not an always type situation. It can go directly correlated sometimes. But we're going to go over that situation and everything else you guys need to know. So drop that like on the video, subscribe to the channel, and turn on that notification bell so you guys will be notified every time a new video is uploaded. So first things first, let's get into the technical analysis. And it could not look more bullish. We are seeing a continued rally to the upside. Going up 1.58% is a great day, really getting us farther away from our support level, which is going to be at about $40 per share. But I did indicate in yesterday's video that we really have to just stay above $43, this low that we did see on Tuesday, to really maintain this bullish rally and to get us enough room for that next leg up. As you guys can see, these two candles right here, we needed to basically stay above this right here, this $43 mark, which we are currently at $44.38 here in after hours as we do currently speak. So we are looking for that rally to the upside. I think we're going to break out past $45, probably put us in between about $47, $48, even closer to $50. And then we're going to get some resistance coming in. So I don't know if we're going to fully break out past 50 tomorrow. That's not really what I'm saying, but I do expect to see a positive move nevertheless to the upside like we do typically see on Fridays. So this is nothing too crazy. If you've been in AMC for a while, you know Fridays tend to be a green day. You also know Thursdays tend to be a very red day, but we got that very red day on Wednesday. So it was one day behind on this week, but it looks very good. Let's take a look at the volume. We're coming in at 67.6 million for volume, which is the lower volume day than we have seen in about the last 10-ish trading days, give or take a little bit. But the fact that we did see this drop off in volume and we still went up 1.58% is a great thing and a good sign. Watch for the volume to come back into the stock to really see that increase in overall percentage points for tomorrow. I do think we're going to have an increase in volume, probably in the range of about 85 to 100 million for volume. So that is basically what you guys need to know from the technical analysis. Watch the $43 mark for support, and to stay above that, watch the $40 level for a solid support level. As we have already touched this multiple times, this is confirmed a support level. And then watch for the $50 resistance level. Now let's move to the ortex data, because we were dead on as well about saying the short interest is likely to go up about 2%. Now for today's update, the short interest has went up roughly 1% since yesterday's update. Now we did indicate on this channel that the short interest would likely go up about 2%, that we probably seen about 2% of the overall float be sold short into the markets on Wednesday when we did have that very red day, due simply to the fact that the share utilization is staying pretty much the same, hovering just under 93%, and the free flow on loan went down about 2%. So meaning you would likely see the share utilization actually go down 2%, and you'd see the free flow on loan go down 2% as well, but we did not see that. We've seen a direct discorrelation between the share utilization staying the same and the free flow on loan going down. When the free flow on loan goes down, that could tell you that shares are actually being sold short into the open market. And that is pretty much what we are seeing. Now we have 17.76% estimated short interest percentage of free float. We are sitting at 90.84 million shares that are sold short. That is a very significant amount. And a lot of people do say, how are we going to short squeeze, if the short interest is only 17%? Well, 17% is a very large number, but AMC is very different. And that's not even to mention the naked shorting, the synthetic shares that are sold short into the marketplace as well. This is only the legal short interest, which is very significant. But like I said, some people think, how are we going to short squeeze with a 17% short interest percentage of free float compared to some stocks that have had 30, 40, 50% short interest but have not short squeezed? There is a couple things that are very different about AMC stock. We have not had a stock in the history of the stock market that I am aware of that people have been talking about looking forward to a short squeeze, that every single investor knows about AMC and what is going on, down to the fraud, manipulation, and corruption, down to the short squeeze trade that is eventually going to short squeeze. There has never been a longer running stock that has been talked about, meaning that you're going to see a whole new level of FOMO buyers, day traders, hedge funds, and institutions buying into the stock. And FOMO buying alone is a huge undisclosed catalyst that we really can't plan for. We don't know how many people are going to look at AMC up 25, 50, 100% in a day and are just going to buy the stock because of that, triggering the short squeeze, the margin calls, the gamma squeeze. We cannot factor in that one variable that is very important. Now, we do know hedge funds, institutions, they're very bullish on AMC. They are waiting for the short squeeze as well. They know possibly more information than us, and the fact that they are loading up on their positions, just like we've seen with this last time around right before this June rally from June 1st to June 3rd, is a very good sign. So all you guys really need to know from that whole spiel is we've never had a stock that has been talked about, that is known by everybody to actually be going through a short squeeze at some point into the future. I think that is very clear and pretty much decided on by most people that this is going to happen. Expect this stock to be very volatile. Everybody knows AMC and is looking to trade AMC. So you're going to see a lot of buying going into the stock once the stock does continue to the upside, and specifically once you do see a gamma squeeze or a short squeeze. So that is how AMC is going to short squeeze. It is very simple. This has never happened in the history of the stock market that I am aware about. We've definitely not had a stock like AMC that has got so much publicity that people just talk about. Even the news cannot help themselves putting out FUD articles to try to scare apes away from the stock, which never works and will never work anyways. So that is all you guys need to know from the ortex data. That is a little spiel on why even 17, almost 18% short interest will lead to a short squeeze eventually. And that is very important. I just want to throw that in for you guys, just so you're aware of why AMC is much different than any other stock like Workhorse that was at about a 45% short interest that never short squeezed. Nobody cared about Workhorse. It wasn't talked about. That's the main key factor and the difference between AMC and other stocks. Now, let's get into this whole gamma squeeze situation. And we are looking at in the money calls at about 44,000 for tomorrow. That does expire tomorrow. Out the money calls at 191,000. So let's go back to the actual options chain for AMC and take a look at where this open interest actually does lie. So at the $45 strike, you're looking at 12,244 for open interest, which does control 1.22 million shares that would have to be bought. At the $46 strike, 8,200 for open interest, still a decent level, nothing too crazy, but that does control 826,000 shares that would have to be bought. At the $47 strike, you're looking at 1.03 million shares that would have to be bought, 10,000 for open interest. $48 strike, 750,000 shares that would have to be bought. At the $49, you're looking at 674,000 shares that would have to be bought. And the $50 strike, if we do get close to 50, you're going to see a lot of volatility. You're going to see a lot of hedging going on, especially because the premium for these contracts is very cheap, only at $19 currently. So if we see a big move, you're going to see a lot of hedging that is going on. We're sitting at 28,000 for open interest at this $50 strike, which obviously does control 2.8 million shares. So you're looking at a decent chance of actually seeing a gamma squeeze or a gamma push is really what I like to call it, where you just see a huge influx of buying happening, not really sending you into a full-on gamma squeeze, especially not like a lot of you guys are used to being in this stock from June 1st to June 3rd. Those kind of gamma squeeze where you go from $15 to $80 some is not very common, as you guys do know. But gamma squeeze overall, pretty common, going up 10 to 20% in a given day. That is a typical gamma squeeze. Now, we are seeing also quite a bit of open interest way out of the money, which is obviously going to expire worthless. We're probably not going to $95 tomorrow. If we do, hey, I'll take it, but it's probably not going to happen. $50 is more likely, in my opinion. That would be a move of about 25%, give or take, maybe about 30%. I don't have the math calculated right at this moment, but it is possible, and I wouldn't take that off of the table. Now, let's get into a little bit of the jobs report and what is expected to actually happen tomorrow, because this is very important. You guys need to know about. We're going to tie this into AMC stock because it directly has a direct correlation. So according to Dow Jones, economists expect 720,000 payrolls to be added in August. That just means jobs. That would be a strong number, but down from the 943,000 in July. The unemployment rate is expected to have slipped to 5.2% from 5.4%, and average hourly earnings are forecast to have risen by 0.3% or 4% on an annual basis. Now, this is what is very important. I think the risks are very much to the downside, said Lee Farage, head of macro strategy for North America at State Street Global Markets. I'm not sure how much we're factoring in the impacts of Delta. Now, this as well is very important. In quotes, if you get a number that doesn't meet expectations, so not 720,000 jobs, say 500,000 jobs instead of 735,000, to me that rules out a taper announcement in September, which is still consistent with the message Fed Chairman Jerome Powell gave in Jackson Hole, Farage said. So essentially, if the jobs actually come in a little bit less, the market makers, the hedge funds, the institutions, really the trading algorithms that are behind all these programs may start to bid up the overall market. So you're likely to actually see a very strong day tomorrow. So I don't think we're actually going to see that negative beta on AMC actually come into effect, where, like we already talked about in the beginning of the video, where it basically directly discorrelates the market. So if the market's up, AMC is down. If AMC is down, the market is up. I don't think that is actually going to play into effect, but it is very possible that the market does slump tomorrow, say if we meet expectations. If jobs come in at expectations and the market makers, hedge funds, the trading algorithms start to price in that taper talks may be announced in September, they might not like that, and the market might actually come down, and hopefully that negative beta effect would kick in. I wouldn't hold my breath on it because it's only an average, but that is basically the situation that we are looking at. Now, this is going to be important for the overall market, right? So if this jobs report does come in good, you only get one jobs report every single month. So if this comes in good or even under expectations and the market really prices in these taper talks aren't going to happen in September, then you're going to be looking at likely a strong next month. You're going to be likely looking at a strong whole month of September, which is probably going to be good for AMC stock. Nevertheless, if the market does come down, you're looking at the potential to actually see margin calls from the hedge funds and institutions, because they are taking their safe collateral, their stocks, their equity positions. Once those go down in value, and AMC is likely to inverse that over time, right? Because their average beta is negative 4.6%, meaning that essentially we could see some shorts be forced to cover if the market does go through a downtrend or even a correction. I'm not holding my breath on any of this. I think AMC is going to be very positive tomorrow. That is what the technicals are telling us. That is what the ortex data, the Stonko tracker, the potential for a gamma squeeze is telling us as well. Now, let's just briefly talk about this situation right here. A $10 billion margin call is likely to be happening at around 10 a.m. Eastern time tomorrow. So the NSCC is providing this notice to its members of the implementation and effective date September 3rd, 2021. On the morning of the effective date, members with a fund deposit below $250,000 will incur a deficit that will require funding by 10 a.m. Eastern time. Now, I already have this calculation right here from the last video, but essentially taking 4,000 participants of the NSCC, because that is the estimated number of participants, 4,000. That is not individual accounts. What they're talking about right here is taking individual accounts from $10,000 to $250,000. So what I did then is times times 4,000 times 240,000, which would be the difference, obviously, between 10,000 and 250,000. Once you times those numbers, you come out to $9.6 billion that potentially will have to be brought into the brought into these accounts with the NSCC to remain eligible for this program. Now, I should have said actually that I did times 4,000 by 10 because I did estimate that on average, hedge funds, institutions, banks, they probably have about 10 accounts with the NSCC. Some obviously being a lot more, some obviously being a lot less. But on average, I would say conservatively about 10 accounts per member of NSCC. So that's where you come out to the $9.6 billion. That is potentially going to be a margin call at 10 a.m. I don't know how much impact this is going to have with AMC because this is for the overall markets. But if the smaller hedge funds and institutions don't have that liquidity to stay in their positions, it's always a chance that they are forced to cover on by the NSCC or the big banks themselves. So that is all you guys need to know from this video. I think we did a decent job of going through everything you need to know. Potential for a gamma squeeze, the ortex data, the technical analysis, stock tracker data, the Friday jobs report, and this $9.6 billion margin call that is going to be happening at about 10 a.m. tomorrow. So with that being said, guys, drop that like on the video, subscribe to the channel, turn on that notification bell. Also, check out the 4 links linked down below in the description. There's a free Discord chat all about AMC stock. There is a link for the buy and sell alerts. We've been killing it over there, and over the past week alone, just in profits on the trades that we have made over there, you would have covered your costs for well over a year with that buy and sell alert. So check that out, link down below in the description as well. There's also 2 links for free stock. Obviously, with public, get up to $70 in your choice free stock. No need to link a bank account or deposit a single dollar to receive your free stock. Like I said, it only takes about 3 minutes time to receive that free stock. So you guys might as well do it. That is the best thing you guys could do for your financial future right now. Sometimes it's $10, sometimes it's $65. You really never know. Might as well roll the dice. They also do not use payment for order flow. Now, there's also a link down below for Webull. Deposit $100 when you fund a brand new account. Get 4 free stocks, each of them potentially worth up to $2,400 a piece. Now, they do use payment for order flow. Obviously, not as much as Robinhood, not even close to as much as Robinhood. So, out of a better alternative between Robinhood and Webull, in my opinion, I like Webull. Better charts, better fills, better options, right, to use on Webull. But they have a setting in Webull where you can turn off the availability for Webull to actually lend your shares out to hedge funds, institutions, or other brokers. So definitely check all those 4 links out. I love and appreciate every single one of you guys. Thank you so much for the support on this channel. We're going to be here. We are here to stay. We are not going anywhere for the whole lifespan of AMC and the short squeeze and forever into the future. So I'm glad you guys can join me today. That is all for this video. I will see you guys in the next one.